Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, January 10th, 2025. Ron Quaranta here with David Brill and Josh Klayman. Thank you all for joining us, everyone on LinkedIn Live and X and YouTube. Also, our recordings are on Spotify and starting next week, Apple Podcasts. Before we begin, our usual disclaimers. Obviously, again, thank you for joining us. Nothing discussed is investment or legal advice, and that everything that David or Josh or I are talking about is really our own personal opinions and not necessarily the opinions of our firms. David, Josh, another busy week as we start plowing through 2025. Josh, let's start with you. What's going on?
So one thing that's been on my mind, which isn't crypto specific, but I think, we've all been talking about this, is just the devastating fires right now that are going on in Los Angeles. So our thoughts and our well wishes and prayers are with all, anyone watching this who is being affected by this, or who has close associates or others who are affected by it. I will just say I have seen, I believe, on X some not exactly GoFundMe things, but some crypto related donation possibilities. I don't want to plug any specific one because number one, it's not in my mind right now, but number two, I also don't want it to be an endorsement for any particular thing. But I think that's something that certainly we're all thinking about.
Yeah. Indeed. Our thoughts go out and prayers to all of those folks. Really difficult times out there.
And I guess apart from that, I mean, before we get into some of the legal and other sorts of things that have happened in the past week, like, guys, what's going on with the markets?
So for everyone out there who's watching, thank you so much. Josh is the poor victim of so many of the text messages that David and I sent to each other. David, 8:30 this morning, the U.S. jobs data came out for December 2024. At 8:31, I popped 2 more Advil and poured another cup of coffee. The consensus estimate was 165,000 jobs. The jobs number was over 250,000 jobs, David, as well as, I think, very large upgrades to or revisions to the November data. And of course, the markets fell out of the bed immediately. I think as of now, the Dow is still down something over 600 points. Crypto followed along with it. David, the revisions are always terrifying, but what did you make out of the jobs data that you saw? Long pause.
There's a lot to digest. I think ultimately, we still have this choppy data. And I think, unfortunately, there's a bit of an irony that when we have strong jobs data, the markets go down. But that you need strong jobs data so that you'd have strong earnings, ideally, from companies who are employing these people, which ideally would lead to the markets going up because there'd be higher profits for companies. So we're in this interesting dynamic that's going on. But I think volatility is coming back. And, I think I wrote this down this morning, but Mohammed Al-Arian said this quote that I think that, really makes a lot of sense. And he said that broader markets are supposed to be looking forward when we have a Fed that is data dependent. And I thought he captured it really well. And so we're making market decisions based on data that's, flawed or faulty or not up to date. And we sort of have this volatility now because of that.
David, to that point, and it's interesting, joking Bitcoin stake bets aside from 2024, and I have not forgotten, I promise. The Santa rally is good and truly dead. David, you and I were talking about this in the virtual green room a little while ago. When you look at the statistical data for many, many decades, if you don't sort of have that Santa rally at the end of a year and beginning of a new year, it generally tends to lead to a down first half of any particular year. And that's notably true for presidential new administration years. David, is correlation between crypto and equities markets holding steady? And do you anticipate that kind of volatility pulling us down?
So it's really interesting. I think the correlation may be more with the dollar and how the dollar acts than with the equity markets. But if we were to see a sell-off in the NASDAQ and the S&P, it'd be very hard to see crypto and Bitcoin accelerate. It would really mean likely that bond rates are really high, the dollar is super strong, and that people are going to sell off risk assets. And even if we don't think Bitcoin is totally correlated, people will sell Bitcoin and other cryptos.
Yeah. And David, and certainly Josh, weigh in. You've heard enough of our meandering conversations on macro trends. David, the one other thing I want to throw out there, this really puts to bed the idea that the Fed will be cutting interest rates at least any time in the first half of the year. And I think the consensus market estimates now are October. David, crypto broadly, Bitcoin particularly, is generally a risk on asset that is tied to declining interest rates that free up risk capital. Is that still the case? Are we now going to be stuck in this kind of volatile holding pattern between now and later on in 2025?
So I think we have a few things at play that might change the dynamic. I don't know if people are seeing the graphic here or can see us, but I think that the dynamic is going to change because we're going to have a lot more people who have access to crypto and Bitcoin than they did before, making the assumption that the wirehouses will allow their customers to access Bitcoin, ETFs, and other products in the first half of this year. But I really want to reiterate that the dollar is getting to levels where we were in 2023, 2022, 2023. And I think if we get much higher than here, it's going to be a problem. Regarding, President-elect Trump really wants to see the markets go up, and he's focused on that, and he tweets about it, and so I think that's a wild card in this. And then I think the other thing that we have to remember is with rate cuts is we've had 100 basis points of rate cuts in the last several months, but now we've had rates go up almost 125 basis points. So the markets are not liking these rate cuts, and I think from that perspective, that we're better off not doing any in the short term.
Josh, what do you think about the conversation here? We have this macroeconomic conversation, but you with, the clientele you look at, has any of this impacted some of the conversations you're having with them, or what's your perspective on the longer term in the macro space?
So, I mean, in terms of client conversations, obviously can't share privilege stuff, but I would say, frequently it's focused more on the deals that we're doing, or the kind of approvals that we're looking to. I think there's still generally a very strong positive view with respect to what the inauguration day and beyond will bring. But I will say, we were kind of all texting about this, or I was lurking while you guys were texting, which is often the case, throwing in an emoji from time to time. But what David Brill had been saying about white collar jobs, I think we saw one of you posted an article, Ron, it may have been you, saying that actually white collar workers who are looking for jobs are having a harder time finding jobs. So I think that's an interesting complication when we're seeing, I think they said now that overall unemployment is 4.1.
Yep.
What I saw.
Yeah, no, that's absolutely right, Josh. And shout out to the Wall Street Journal. There's a journal article that I shared. I think it was yesterday or the day before. David Nostradamus Brill, Josh, is absolutely correct. The impact of white collar jobs is percolating through some of the data. David, I want to wrap the economic conversation up with one thing, pushing a little bit back on the logic that you and I have been talking about here. When you look at the macro trends and we say, it's a little more volatile than we thought. This might be a downdraft for markets, both equities and crypto. Over $2.25 billion in BTC and ETH options are going to be expiring soon.
Mm-hmm.
And the put call ratio on that is something like 0.65 or 0.68, which, depending on which economist or which macro person or you talk to, that's a contrarian indicator. Am I overreading kind of the options data, David?
I don't know that you are, but I think this month is going to be very choppy. We now know that the government has approval to sell the Silk Road Bitcoin, which is about 6.6 billion worth. There's been some activity in the market that looks like somebody is just kind of selling at certain prices and has the sell button next to them when it reaches a certain point. So, we have to wonder if we have this overhang going on. But I think the regulatory changes that we expect to come this year and the accessibility of these products to the broader, trading folks, whether through their FAs or through other mechanisms, their actual like Merrill Lynch or Morgan Stanley, I think that will offset some of this. And then I think also we're going to see more ETF products this year. So I think we're going to see more demand. And, until until people become more comfortable holding crypto on their crypto exchanges, and I mean the non-crypto native people, the more ETFs we have may just drive more liquidity where people feel like, oh, it's in my securities account. I don't have to worry about it if I lose a key or a wallet and such. And so we, as an industry, have to work on that to make that better for people so that they don't have this default option and don't consider the crypto rails as well.
Absolutely, David. Appreciate it. Josh, David queued us up. Go ahead. Sorry, Josh.
Oh, I was going to say one other thing that's been sort of on my mind, just in general. I'd love to hear your thoughts about it, although I'm not sure exactly what impact it would have on the crypto markets. But that's really, commercial real estate. As I've been hearing about more banks and other large institutions calling people back to work at large office buildings, it makes me think about some of the loans that may not have been marked to market, or that, I won't go further, but that's something that I wonder whether that will come home to roost this year and what the effects will be.
Ron and I were talking about that, and if the rates continue to stay high, refinancing some of these real estate loans will be challenging and expensive.
And to that point, David, one of the things that, I had a conversation with a family friend the other day, and they're like, they're looking at refinancing. It's not a commercial loan, but Josh, to the point, their mortgage. And in the face of interest rates that were going down through the later part of 2024, mortgage rates going up. And what a lot of people don't realize, sadly, is that a lot of lending products are queued to the 10-year Treasury bill, which, David, you and I were talking about earlier today. The 30-year Treasury in the United States hit over 5%. That's not long-term a good thing. That's an indicator of kind of concerns about the future market. So really good point. And I feel like the commercial real estate conversation, David, Josh, just keeps getting kicked down the road. Like it's along with the deficit and the debt for the U.S. Just kick that can down the road. And I wonder what that impact's going to be later on in the year. Josh, David queued us up for a segue very appropriately into something that very importantly happened this week in the regulatory and judicial space was the SEC v. Coinbase case, which, correct me if I'm wrong, it was Judge Fela again?
Yes.
What was Judge Fela's ruling on interlocutory appeal?
You throwing that to me?
I am.
Okay. So, in case folks haven't heard, Coinbase was granted leave to appeal to the Second Circuit Judge Fela's earlier decision on the motion to dismiss. And you may say, okay, very interesting, but actually it's hugely interesting. And just the fact that interlocutory appeal was the ability to do so was granted, is a big win, right?
Yeah.
Because we saw it being denied, for example, in the Ripple case, right? We saw it, I believe, in another case as well. It may have been denied, but what it also, I think, is very interesting is in the opinion and order itself, Judge Fela, who, if we think back to the motion to dismiss and her opinion on that,
Yep.
In some respects, she appeared to take positions that were similar to Judge Rakoff, right, from the Terraform Labs case, right, in the same district. And by contrast, we have Judge Torres's decision in the same district in the Ripple Labs case. So what I think is so powerful in this opinion and order is that Judge Fela actually says, as part of this, as part of her determination to grant leave, she says, obviously, it's a controlling question of law, but also that substantial grounds exist to have a difference of opinion on the application of the Howey test to digital assets. Yep. And she says that this, obviously, as we all know, the resolution of this difference of opinion would really have a big effect on this case and other cases. And she cites, for example, the differences between Judge Torres's Ripple decision and the Terraform Labs decision decided by Judge Rakoff. So right now, or pending appeal, the SEC v. Coinbase case is stayed. What I think also is so interesting with this is that it comes at a time where, number one, we're waiting for January 15th to see whether the SEC was even going to appeal the Ripple case. We're also awaiting, I think on January 19th, the day before Inauguration Day, when Gary Gensler steps down. We know that that Trump has said that he plans to appoint or, Paul Atkins as the next SEC chair, pending confirmation, of course. And we know that there will be a new, for example, director of Corp Fin and a new director of enforcement, right, who may come in and revisit things. We've also heard, and some have suggested this, including in an article that our friends Sam Enzer and Lewis Cohen wrote, and possibly others. I haven't checked to see all the authors, about the possibility that Trump could have an executive order in his early days in office, potentially directing agencies to kind of revisit these questions. So it's a fascinating time, a really big move, and it as we've talked about, the gears of justice and the court system, they continue. And we had said, a court could rule one of many different ways. Well, guess what? Now it's stayed. So there will be no ruling right now on this, and hopefully none after.
Josh,
that was a long-winded way of saying all that.
Josh, for dummies like me, what's an interlocutory appeal?
So without having Black's Law Dictionary in front of me, it's basically in the middle of the case.
Yeah.
Right? So that you don't have to wait until you have a final determination in the case itself.
Got it. David, weigh in here. And one other thing, and I didn't read the summary from the court, but if I recall reading the synopsis correctly, the SEC was still holding their ground and really pushing back on this. David, is that correct?
Yeah. And look, I spent a lot of time reading the case as well. And Josh hit on a lot of the points I wanted to hit on.
Sorry.
No. It's all good. We're a team on the podcast. But I do think what's interesting is that by, like the SEC has always had the view, like what they're saying is sort of dogma, and that the rules are not, the rules, they're obvious, and that, compliance is necessary. And the judge is really saying these are novel issues of first impression. We've had different cases in the, in the district court level where judges have reached different conclusions. And that she wanted to send this up to the Second Circuit to allow them to really consider the role of the digital ecosystem and the application of Howey to it. Yeah. So I think that it really, there's been the default that the SEC has the correct position here. And I think it's moved to, well, this is novel, and we now need the Second Circuit to make a decision on these. And I think that's a powerful sort of statement as we look at some of the other exchange cases. And when I say exchange cases, we have to, I say that in quotes, exchanges. So I think that's really a powerful thing to find. Also, if you look deep in Judge Failure's order, she found in some places that she thought the SEC's arguments were misleading. And so that was something interesting also. And I think that, the body of law and the way that the SEC's been arguing these cases isn't necessarily consistent with the rulings that were made in the past and the way they're relying on these cases.
David, to that point, it's easy for everyone, we've said this before, it's easy for everyone to bash on the Gensler SEC particularly. And I certainly get the point that these are novel issues, as Judge Phelan notes. That said, there are courts, I'm probably thinking of Judge Rakoff, Josh, correct me if I'm wrong, that don't think it's a novel issue. And I wonder really how much case law needs to be built before the Congress might act on revisiting securities law. Is that too much to consider, David or Josh?
I mean, look, I think ultimately it would be great if there were more clarity, because if there were legislation or if the SEC, refine their view on these issues and on how they apply Howey, the litigations could change significantly and the trajectory of them could change. But I think one thing I want to add is, Judge Rakoff was ruling on terra firma, which was like a motion, a motion to dismiss. It was, if I'm recalling correctly, the fact pattern was more, fraud-like than, market structure-like. And so it's a very different set of circumstances that he was ruling on versus the other judges in the district court level.
Fair point, David. Josh, go ahead.
Yeah, I was just going to say, one of the other distinguishing factors, right, with these types of cases is that before we had, the SEC's enforcement against, I guess, Bittrex, right, and the one that came before that had the, a name that I wasn't that familiar with before that case, and now it has escaped me altogether. There really weren't these cases against platforms
Right.
by the SEC. It was always issuer, or equivalent. Some people may say there are no such things as issuers, right? And so, holding aside that argument, because obviously the SEC brought those cases on a particular theory.
Mm-hmm.
There was an issuer in that, so that's why I'm using that terminology for those at home who are parsing words with me right now. But yeah, so I would say in that sense, these cases definitely are novel because we haven't seen the platform cases before. And what I'm wondering also is, do we think that the Second Circuit will have a decision, or is there a possibility that it's kicked up to the Second Circuit and then the case goes away, right? Because there's a new director of enforcement. I've thought about that as a possibility. I don't know if that's a possibility. I also, for those at home, although you guys may know, I don't know whether now that Coinbase has leave to appeal to the Second Circuit, I don't know whether there's any other sort of step for the Second Circuit to accept the case,
Yep.
or if it just automatically would be kicked up to it. So.
Yeah. The one thing I'd add, Ron, is that we've talked about this before, but I'm of the view that this case will likely be settled before full adjudication before the Second Circuit. My view is that there will be some negotiations once the new SEC chair comes in and terms are set, or maybe it's just the three for a period of time. But we're getting a little background noise. But ultimately, that is my view. So I think these could go on parallel tracks. Like this case could move forward to the Second Circuit. But in the meantime, I think there's a strong possibility that there could be negotiations and some sort of settlement reached that, and that ultimately this case would go away.
David, Josh, thanks. And again, this is what I get for getting a new mic. Hopefully you both can still hear me okay. I don't want to give short shrift to the other regulator in the conversation, the CFTC. Just following on the news, David, Josh, I'm going to rip up the script a little bit. The current chair, Rostin Benham, has said he will be resigning sometime this month. I forgot the specific day, probably very close to the inauguration day, if not on the date. And he noted publicly that there were some gaps in the crypto markets that needed to be covered. Josh, David, is it overthinking the idea that many in the crypto space say the CFTC would be a quote unquote better regulator for crypto? I mean, do they have the resources for that? And what are your perspectives on where does the CFTC land in all of this development of crypto in a new administration? David, you can go first.
I can go first. So,
Josh gave me the look that said, call David.
Yeah, I got to give you a better look then, Ron.
Look at that.
No, all joking aside, I think a lot of it comes down to classification. We know that Bitcoin's a commodity. I think we all uniformly believe that Ether is a commodity. How are these other tokens going to be treated? And again, it's not even the actual token itself, is how are the contracts who acquire these tokens going to be treated? And that's sort of the big question. So yes, I think there's some gaps because it's not clear where jurisdiction lies. And who knows if in the new administration they decide that maybe jurisdiction for some of these things should fall under a different regime. Whether commerce has the right to be making legislation over the crypto industry. So I think there's a lot left to unpack, and I think he's fair in saying that. And I think the expectation is in the next 2 years we'll get a lot more clarity around it.
David, Josh, I'm going to be a little. Go ahead, Josh.
Oh, I was just going to say, I think that the CFTC is as prepared as it can be right now, right? Or is working towards being as prepared as it can be. Certainly, the digital asset subcommittee of the GMAC,
yep.
The utility token workstream put together, proposed definitions for the concept of a utility token that would be a commodity but not a security. And so I think that had the input from a number of people in industry and also lawyers as well. And so I think that the CFTC has been taking great strides, right? It's just more a matter of like, okay, well, where's the line?
Yeah.
And are they getting the authority? I think one of the challenges is also we've seen challenges which have been successful and which many expect continue to be successful, where regulators have created rules that exceed their statutory authority or that are alleged to or otherwise to violate the Administrative Procedures Act. So I think there is that fine point where if an agency does move forward to define something, there is the possibility of challenges from various parties, sometimes from people in our industry, right? And perhaps there could also be sometimes from other perspectives. I do think I heard that I think it was on Laura Shin's Unchained podcast. I think I saw that many are saying that Summer Mersinger is
Mhm. I saw
is a
that.
front runner
Yep.
potentially for the next CFTC chair. Do you guys have any thoughts about that?
I don't know Summer at all, so I regretfully did not look into the background too much. But Josh, really good point, and it'll be interesting to see who sits in that chair. Josh, David, just a brief moment. Again, for everyone in the audience, thank you so much for joining us. If you've got questions for Josh or David or I, certainly put them in the chat. We'll respond to them as quickly as we can. Josh, David, if I could, I want to push back on something that's probably going to sound more provocative than I mean it to be. David, you noted something earlier that something along the lines of, well, everyone uniformly agrees that Bitcoin is a commodity. One of the things I'm going to push back on a little bit, not necessarily that I disagree with you, is that no one's explained specifically why it is a commodity. And I would love to hear someone either in the regulatory space or candidly in the crypto space, unless someone throws out sufficiently decentralized again, why do we claim it's a commodity universally accepted as such?
Well, for starters, I mean, I think, from a legal standpoint, that's how, like in the ETFs, it's, referred to, and then securities filings for the different ETFs, that's the assumption, and the SEC's come out and said it. Look, I think on the whole, this ecosystem emerged in a way that I think that wasn't expected. And so I think in some ways the laws are playing catch up instead of thinking ahead of time, like, how do we classify these things? What are we going to do with it? I think Bitcoin was out of the barn so for such a long time that you couldn't really go back and say it was a security.
Yeah.
The ripple effects would have been significant, and there would have been a lot of challenges to it. So I think there's some of that goes on, and the same thing with Ethereum. So
Yeah.
I think we'll get more clarity in this administration, but I think that was the genesis of that sort of classification.
Josh,
And
go.
also, I think the fundraising too, right? And the fact that we don't know who Satoshi Nakamoto is, and Satoshi Nakamoto has not been posting or, back in the day tweeting or doing other things to capitalize. To David's point, I do think, like, could you imagine if we had a world where the digital assets that are in the market right now, or they in many cases hadn't been launched pursuant to an ICO?
Right.
Right? I
Right.
think
Good
that
point.
has really colored a lot of the analysis just because of this, the initial capital raise.
Really fair point. And could you have imagined Satoshi Nakamoto on Twitter getting a Wells notice at some point, which would have been an interesting conversation. Josh, David, as we talk about the regulatory stuff, I just want to kind of wrap that up with a bow a little bit. Talking, and we've had this conversation for several months, particularly towards the end of last year, the industry's impact on the regulatory regime and bodies here in the United States. And it's still relatively recent news. The industry seems successful in blocking a not crypto friendly regulator from nomination. Commissioner Crenshaw, respectfully was up for nomination. I think that's not even being brought up for a vote. David, Josh, is that strictly the pressure from the industry itself, or is it something more? David, what are your thoughts?
Well, I mean, I think from the reporting, the crypto industry was leading the push. Look, I think there was a view amongst the industry that Commissioner Crenshaw was out of touch with what the reality on the ground was, and pushing back against the court's ruling that a Bitcoin ETF should trade, really didn't sit well with a lot of people, and sort of this was a reasoned court opinion and thoughtful process. And so really to still be sort of pushing back against it after the fact, I think didn't sit well with a lot of people, regardless of whether they were crypto people or not. And so I think that had a lot to do with it. But ultimately, there are probably people behind the scenes and other groups that had a view, and that was shared as well.
Yeah. Josh, thoughts?
I mean, I agree with David generally. Yeah.
Always an interesting and easy conversation. David, Josh, thank you both. David, let's go back to some of the macro, and I want to weave a tale for you, and I want to bring you back to your days in the equity analyst space, and I want to talk about the elasticity of demand when we talk about things like crypto versus equity. In a world where interest rates are for 10 years and 30 years heading up 4 or 5% ish range, why is there an incentive to invest in something more risky when you can get almost risk-free at 5%? Is there an elasticity of demand between classic TradFi and the crypto markets?
Well, I think the difference here is like who the demand is and who had access.
Mm.
I think the fact that a large majority of the population it doesn't have online trading accounts, but I shouldn't even say a large majority of the population that has, FAs and who work with the traditional wirehouses that really don't have an access point through those FAs to buy Bitcoin and crypto generally will now have access to it. So there's a demand that will exist, that can be executed on that doesn't exist right now. I think also, we hear these rumors of states or countries, buying Bitcoin and holding as a strategic reserve. If we were to see a few of those, entities do that, I think that would drive demand as well. So what I would say is that there's sort of a unique situation here where people have interest and they don't have access. So once they get access, we can really get a better sense of what the demand picture looks like. And the last thing is banks still can't custody crypto. So there's that whole area of the financial ecosystem where maybe they would want to hold some and, take positions on it, and they can't.
Right. Josh, when the legion of managers at the Klayman family office reach out to you and say, here's how we're allocating, are they allocating to some of these ETFs? I'm only half kidding, but Josh, honestly, when you look at the marketplace, as we all invest and think about it, I know there are limitations to what you can talk about. What are your thoughts on where that money comes from in the future?
I mean, I think it's going to come from all over. Like, and I guess what I would say, this is something that's been going through my head. You guys are going to probably be like, what's wrong with you? But on the way to drop my kids off this morning at school, I was singing along to the radio and a Tupac song came on. Okay. And as I was singing along, I found myself singing the lyric that now is nonsensical, which says something like, they jealous when they see you with my mobile phone, right? I can do it when the song is on. Like, and so now looking back, like the idea that someone would be jealous because they see you with a mobile phone, like our phones are everywhere. Everyone has them. They're ubiquitous. Like, and they do so much more than just, answer the phone. That's how I think about our industry, right? in a lyric is that someday we'll be looking back and the idea of, well, who's going to be doing this? Well, it's just going to be
Right.
It's just going to be. So that's what I think.
David and I will pay big money to hear you rap at the next WSBA karaoke. And if anyone in the audience, agrees with us, please send us a thumbs up. Josh, David, really important points. David, I want to wrap it up with one last thing and then certainly open it up for some of the thoughts you both have. You mentioned the ETFs, and we've certainly seen this kind of push around new ETFs, particularly under a new administration. The other big catalyst in our mind, I think, is the wirehouses that we've talked about. And there's been ongoing reports that many more of the wirehouses are really beginning in earnest to look at crypto on behalf of their clients. In addition to, and someone correct me if I'm wrong, registered investment advisors, a latest survey pointed to something like the majority of them are now deeply considering allocations on behalf of their clients. That's a big deal. Those are thousands upon thousands of investment advisors. David, what in your mind is the important catalyst there, and what's the timeline around that? Shout out to Emma Channing, who will have to fly out and do karaoke as well. But David, talk to us about the wirehouses.
Look, I think there's this whole population that's seen the asset. I think Bitcoin was the third highest performing asset in this past year, or maybe as a category was the highest, but of different, I think MicroStrategy outperformed Bitcoin in 2024. Look, people want exposure to assets that are high performing, that have a lot of alpha. And, I really could see customers, really pressing their FAs to say, like, look, these ETFs work. It's been involved, they've been in play for a while. They're priced accordingly. Like, we want access to this. So I think it's really going to be customer demand that leads this. And I would hope that in this first quarter this year, at least we'll see another major wirehouse allow their customers to have access to it. And another thing, if you think about it, I know there are issues with suitability, and I know that's being thought about quite a bit, but ultimately, you have an SEC approved product, and you have people who want access to it. And, I don't know how long you want to be the gatekeeper to prevent people from getting access to it.
Josh, David, go ahead, Josh.
I just want to clarify, since I could not remember without the music playing, the lyric actually is, they get jealous when they see you with your mobile phone.
We're so doing happy hour karaoke.
Yes.
And I would pay extra to watch David rap old school Sugar Hill Gang. Someone out there remind me, tell me if they remember that. Josh, David, thank you both so much. We've got a busy several weeks coming up, obviously, with the inauguration coming up as well. David, Josh, as we start to wrap up, what are your thoughts about the coming week? And Josh, in particular, when we look at some of the legislative cases, we've heard a lot of on day one things will happen. Do you anticipate a wholesale sort of let's make the non-fraud cases go away? And what about the private litigation?
So the private litigation, I mean, we can't control the plaintiffs.
Right.
It's like when clients come to you and they're like, well, okay, like, how can I not be sued? Like, what do we, well, guess what? Like most times, I mean, sometimes you might be able to restrict people from suing you, by contract, but like a lot of times people may sue you. And the question is like, well, if they sue you, like, will they win? Like as opposed to like preventing them from suing you altogether or from bringing some sort of claim against you. Right. And so I think that's one thing where we can't, even with, we can't stop the plaintiff's lawyers. Right. But what we can do is, to the extent that the law moves in a way, like to the extent we do get the Second Circuit appeal, and to the extent it does come in favor of, a worldview and an interpretation of the application of Howey to digital assets that is industry friendly, right? But otherwise, we can't stop that. And certainly, plaintiffs' lawyers also can bring suits in different jurisdictions.
Yeah.
Right? So I think that we have to hold aside, because that's sort of a bit of a wild card, but we can never prevent that in any industry. Right. I think in terms of, legislative action, I don't anticipate that in the immediate term, we're going to see anything just right off the bat, because I think the industry has a lot of thoughts, and there are some who are not happy with the proposed concepts of Fit 21, right? There are others who say, well, this is the best option that we've had, right? And similarly, questions with federal stablecoin legislation, things like that. Hopefully, we'll see something to end SAB 121 in the near term.
That would be a nice quick win.
Yeah, and I do think, obviously we don't know how this will proceed, but the type of executive order that was mentioned in that article that CoinDesk published that I referenced earlier, who knows? Maybe there will be an executive order in the early days that would cause the regulators to take a look at their litigation docket and other sorts of things, maybe what kind of rules they have pending.
Yep. Josh, thanks so much. David, as we round out this episode, and your 80-ounce tomahawk steak is now on reserve at Porterhouse in New York City, and yes, we will be sharing photos of that. What do you anticipate, David, between now and our next broadcast, particularly from a markets action perspective?
One thing is, I just saw this morning that the CFPB has entered the building. Yes. And I really just took a quick look at that, but basically wanting to hold wallet providers responsible for fraud activity or losses that customers have using crypto wallets. So I think we'll be scrutinizing that more. I expect one or two more surprises that come in next week from this administration as it winds down. Look, I originally thought we would see a rally into the election, but with these high, the dollar staying so high, I'm really going to sort of revisit that thought, over the weekend. But I think for all of us, I'm really watching like in Bitcoin being, staying above 92,000. We're in this range between 92,000 and 108,000. So would like to see us break through 95,000 over the weekend or into next week. But I think we really have to pay attention to old school TradFi bond yields and where the dollar is, because I think that's the tail wagging the dog.
David, we would never bring forward investment advice, but Kieran, welcome. Thanks to the show. David, what's the next big leg down for Bitcoin below 92,000 if it stays sustained there?
I mean, I'd have to look more closely because I've been having such a positive take on things, but I think, the 86 or 88 level would be the next level down. I'm also, one thing that's also interesting is we've had a very quiet altcoin sell-off. If you go back and look, altcoins had a lot of gains at the first half of 2025. We're kind of revisiting the lower ends of those ranges and right now, and so you're really seeing, besides Bitcoin, the other, besides a few exceptions, a lot of the tokens have sold off quite a bit.
Are we in oversold fear territory, David, in your mind?
With the dollar where it is and with the bond yields where they are, I don't feel like it's oversold. And I think also we have this potential $6 billion worth of Bitcoin overhang potentially on the market. So I think it's going to be a very interesting week, but I am not sure that we're going to run up into the election now. So I think it's really going to be dollar and old school TradFi, is going to drive the bus here on where we head.
Indeed. David, Josh, we're going to wrap it up there. The WSBA is starting its work for the new year. So many meetings with colleagues across all of the different industry verticals, including our impending trip to Washington, D.C. Certainly no time anywhere near the inauguration, but you'll be hearing more about that as well. Everyone who joined us, thank you so much for joining us. If you have additional questions for Josh or David or I, info@wsba.co. We will be back next week, and Josh will give us a rendition of a Tupac song. We will leave it there, everyone. Have a great weekend. Take care. Bye.
Take care, everybody.
Thanks. Take care.